costs. I mean, let's start there, right? Costs have always been a problem. Costs have always been an area where I think even pre-pandemic or post-pandemic, however you want to call it, costs were a problem. A lot of those same problems are still a problem now that you come out of the pandemic. Now you marry that with inflation and you have an even bigger problem. So some of the areas that I've always poked, I thought was interesting in our conversation is a lot of exhibitors, a lot of people, they're always talking about the cost, which is fine. And I do think there are certain areas that need to be addressed in our industry and they take the brunt of it, right? But the other side of that is, okay, if you have a cost, well, then what are you measuring? What are the results? What are you like? You're spending this, but what are you getting from spending it? So to me, when it comes to costs, yes, the reality is that costs are high, but costs were always high. Exhibit space was always expensive. The internet, the drayage. Now you have materials, logistics, labor. Everything is expensive, but seemingly it's always been.
Yeah, absolutely. But I think this is the first time that our industry has been through such a steep period of inflationary cost increases at a point in time where our customers have had significant other more measurable ways to get to market. And so while the events industry has, and events as a channel have weathered many previous periods of steep inflation, the world is different now because the events industry is significantly disadvantaged from an inflation perspective versus other channels. And we're not impervious to cost increases. We've seen that as an industry with corporates moving away from certain major trade shows in favor of doing their own proprietary event activities, and plenty of corporates changing their events behavior in the way that they use events. I think the friction around cost versus like the perceived imperative to run certain events is already a burning issue in a lot of corporate environments.
Yeah.
And that's not going to go away. In fact, I think that's going to accelerate because even though it's reasonable at this stage to say that we're over the worst of the inflationary period that we've been through, event costs, they're never going to come down, right? They're only ever going to go up. And I think there's a number of areas in which event costs are going to increase way above and beyond inflation over the coming years, notably labor costs, and most notably in the more unionized states in the US. And secondly, I think that trade show exhibit space costs, they have to increase. If we look at the number of shows that had to go 2 to 3 years, or which in some cases was one cycle or 2 cycles with no price increase, while the trade show organizers' operational costs for running the event have significantly increased over that time, right? They might have their revenues back to a 2019 position, but the cost base and the profitability of those events is not yet back there. And so for me, it's fairly predictable that trade show organizers, to satisfy their shareholders, and in many cases to run a healthy business, they have to address for those costs moving forward. So to me, it's predictable that the cost line is only going one way on this chart. And that therefore, exactly to your point, prove to me that in 2019, I spent $40,000 on an exhibit. I'm spending $60,000 to pluck a number for the very same exhibit. And I've got nothing more to show for it in 2023, 2024 than I did in 2019. Where's the value? Where's the proof of value that continues to be viable? And then how's that going to look over the coming years as costs continue to increase?
So I think it's a really interesting point. And what it makes me think about is kind of this bigger picture thing, which is essentially that, I mean, look, if costs are going to continue to rise at some point, exhibitors or your conference people have to be able to go to the show and say, look, like, we understand the costs have to increase, but also here's our side of things. Here's our data. Here's our information. Here's what we are getting or we are not getting. At the end of the day, a third-party conference, everybody needs the value, right? The sponsors, the exhibitors, the attendees. It's a big orchestration. I think as you move forward, and one of the main points that I keep touching on in the event space, and it's one of the things I love that what your company is doing, is I feel like you're contributing to this, which is that everything has to get better. Everything has to get better. And everyone has to kick in to be, it's not just the exhibitors that have to measure themselves. It's the associations, right? It's the shows. It's people like me. I have to help our customer get there, find results, be better. It's everyone in the ecosystem can no longer be like, oh, events just happen. They just are. Oh, we've always gone, or it's always been this way. You hear that all the time, nonstop. And I think one of the things that, and I talked to you about this, makes me think is like, you go pre-2016, 15, the internet wasn't mature enough people still needed these third-party shows. They had to be there. They had to, because they didn't have the maturity of seamless AI, LinkedIn, these contact info, for the ability to find contacts and get in front of the customer is so rampant now with Facebook, LinkedIn, all these softwares. It's changed. People don't need to attend the third-party show that they used to. So I think it got a little lazy back in the day, right? The events, everyone there, and then companies had an excuse for not measuring. It was like, yeah, we have to be there anyway. And I don't think that urgency was placed on it.
Yeah, like, I tend to agree. I do think that a lot of companies do, and quite rightly believe that they do need to be at a lot of these third-party trade shows. While there's no doubt that the maturity of digital and all the online channels that we have has really come of age. And certainly when we look at in fact, all of these digital channels, they're so measurable. Like marketers can really prove ROI. Like it's table stake stuff, right? But still, so many companies are rightly choosing to be in that live environment where they can affect more complicated conversations and tackle more complicated challenges and build relationships and accelerate the decision-making process or relationship building or brand trust in a way that you just simply cannot do, even with these more mature digital channels than we had years ago. So I think that the business case and the rationale to exhibit or to run any in-person events activity as a communications tool has always been strong and remains strong by comparison to the alternatives. But the challenge is how over the coming years, as costs increase and as other factors like the measurability of other channels. And the other point that you made when you were introducing the session on the back of our previous conversations was the carbon situation. And I think that's a really interesting one, because I wouldn't mind betting that a lot of people that are on this webinar today and a lot of people that will be watching it afterwards are not today experiencing any real pressure that is impacting their choice as to whether or not to run an event or whether or not to exhibit at an event that is coming from a carbon consumption standpoint. And that's one of the things that I think we have to have a real conversation about, because what we're experiencing today is not indicative of where we'll be in 3 years' time. And there's a number of factors that underpin that.
I think the forward thinking on that is good. I'd love to hear those factors or what you think they are. From my seat, what I've seen is that when you don't have economical or geopolitical or issues that take center stage, like the last 6 months to 12 months, inflation took center stage. You know what I mean? It was the only thing. No one was talking about the carbon footprint of events. No one was talking about sustainability. Some were. But I think what ends up happening in the event business that I've seen is that people put things off to the side just to get it done in the moment, right? Because it's what they're focused on in the moment is that inflation, that price increase. But then everything starts to compress and pile up. For the same example, that the same problems the event industry had in 17, 18, 19, we still have now. We still have them. If you go back to 2017, look at all the reports, you do the data, right? You do the research, you talk to attendees, exhibitors, all that, or any of the reports that I get, the same problems, the same graphs, the same line items exist now that existed back then. So it begs the question, when you come to a carbon thing, at some point, when are people going to start to make real moves? Because eventually what's going to happen is carbon will take center stage. Then executives and shareholders will put the pressure downward about it because they got to be front and center of it. So now event marketers, CMOs, they're going to be dealing with, oh shit, inflation, right? We never really solved this problem. We're not measuring our results. We don't know if these shows are drawing a big return. Oh, now we have to be sustainable in every single thing that we do with events. Oh my God, right? And it just starts to compound.
Yeah, absolutely. I think you make a really good observation around how sort of myopically we focus on the biggest problem that's right in front of us now. And that's kind of, I think, a pretty normal thing that most people do in most industries or most people do in life. But it doesn't mean the other problems are going away. And in the same way that the cost line is only going up for this industry, the carbon ship has sailed. I don't believe that in my lifetime, we're ever going to see a time where the pressure to reduce carbon emissions reduces or levels out even. Like, it's only ever likely to increase. And that
but I think because there's too many unsolved problems. right?
Yeah,
I mean,
well, exactly.
there's just too many other unsolved problems to get to that one. It's never
Well,
going to
this
warrant.
big existential one that we all have a very big stake in that ultimately trumps everything, right? And it does sound dramatic when you talk about it from where we are today, because we're still able to run events without a great deal of a sort of carbon filter, if you like. Like, does the event meet certain carbon characteristics? Great, it does. You can run it. Does the event prove its value? Great, you can run it. I think when you look at the variables, and I've spent a little bit of time. I am in the research industry by background, so I've spent some time looking at this. But certainly, the frequency of adverse weather events is increasing, and then with that, the media attention on climate change is continually increasing. And we are seeing, and you can easily observe the shift in societal pressure around the expectations on corporate conduct in the area of sustainability. And with this, over the last few years, most large corporates have made some hard commitments for 2030 in line with their sort of net zero initiatives. And so those are hard commitments to the public, to their customers, to their shareholders that are in the public domain. And it's a matter of brand integrity that those commitments are met. And 2030 is looming closer every quarter that passes. So it is a concern. And like, for me, like when you think about where the real power lies in large corporations, of course, the real power lies at the top. And you think about where's the real pressure on the C-suite where it comes to carbon, and it comes from customers and their expectations, and it particularly comes from shareholders. And so I did a little bit of work, and this is public domain data. You can look it up yourself. But S&P Global studied the number of shareholder activism campaigns. And if you look back at the last 3-4 years, the number of those shareholder activism campaigns where shareholders are directly lobbying the management of the businesses in which they're invested to effect a change. But the number of those campaigns that are environmental by nature has dramatically increased. It's probably one of the, if not the fastest growing areas of shareholder pressure that large corporations are facing. And if you run the trend line forward, looking year on year as to the number of those shareholder campaigns, then it's predictable that even if the trend is linear, that over the next, let's say 3 to 4 years, there's going to be thousands of shareholder campaigns that the C-suite of large corporations are going to be facing, putting them under increasing pressure to cut their carbon emissions and to change the way in which they behave. And so
it's going to catch us.
Yeah. I don't think anyone could escape this either. There's no corporate of any power that is impervious to this. Like just recently, Amazon got terrible press for not meeting their commitments in line with SBTI, which they were one of the early adopters of the science-based targets initiatives. And so, nobody's beyond this as a challenge. And I think it is there's no doubt that senior stakeholders in large corporates love their events, but they love their shareholder relations and their share price more. And that directly impacts the commercial and strategic strength of their position in the business.